Inventory has climbed to the highest level that we've seen in Orange County in years. And on top of that, interest rates are still high, affordability is still low. So does this mean we're going to see a market correction in Orange County sometime soon? That's exactly what we're going to be talking about today. So on today's episode, we're going over my 2025 June housing market forecast for Orange County. So let's go ahead and get into it. So the summer of no sizzle is officially here in the Orange County housing market. So if you look at the amount of homes hitting the market, it is still going up month after month. So last month we started the month around 4,400 homes. This month at the beginning of June we were at 4,600 homes. But on the other side of things, in terms of how many homes are coming off the market, that's actually been going down over the last 2 months. So 2 months ago, about 1,900 homes sold in Orange County, but just last month it was only 1,800 homes. So when inventory is going up and the amount of homes coming off the market is slightly going down, it's slowing the market down more and more every single month. And we can see that in the median days on market. So basically how long it takes homes to get into escrow. At the beginning of May, it was 35 days. At the beginning of June, it went up to 42 days. So we're seeing homes take longer to sell than we have in a while in Orange County. And if you look at over the last 500 sales at the end of May, 47% of them sold for at or above asking price, and the rest had to do a price reduction. So Orange County is a big county with a lot of different neighborhoods, so I'm not saying that home values are going down everywhere. So there's gonna be small chunks of neighborhoods scattered throughout Orange County where home values are still going up, a much larger portion of neighborhoods where home values are remaining flat, and there are definitely some areas of Orange County where we're starting to see some price declines, but overall the Orange County market is still very healthy. We're in more of a balanced market than anything else right now. However, if these trends continue over the next couple months, things can definitely start to shift. So what's going to be the biggest contributing factor if this trend continues or changes? Well, if you've watched this show before, you probably already know the answer. It's interest rates. So interest rates are still in the very high sixes, and they've been stably in that channel for the last 2 months, even briefly going over 7% last month for a short time before going back down to the 6.9, 6.8 range where it's been hovering for a while now. Now, if rates stay in this range, there's a good chance these trends are going to continue. More inventory is going to hit the market, demand's going to stay relatively unchanged, and you're going to see us, as the summer goes on, get closer and closer to a slight buyer's market. Now I say slight buyer's market because we are not expecting any major corrections anytime soon based on all the economic data coming out around this area. However, there is a chance that buyers are going to have a little bit more options to choose from. Homes are sitting on the market longer, sellers want to get them sold, and they're going to be more open to negotiate those price to something maybe a little bit lower than the last sale price they've seen in their neighborhood. Now, what if interest rates start breaking out of that trend and let's say they go higher or they go lower? How is that going to impact the housing market? Well, we already have a good amount of data over the last year in terms of what buyers are thinking based on the different interest rates that we've been seeing. And we have definitely seen that anytime interest rates hit above that 7% mark, a lot of buyers pull back because it's a psychological barrier. They say it's at 7%. I want to wait. I don't want to shop for homes right now. I'm going to wait for it to drop below that 7% mark. And then even if it gets to that 6.9, a lot of them start to re-enter the market again. So if we start seeing interest rates go above 7%, especially for the long term, we could see a quicker downturn in the market. However, there's not a lot of economic data out there in support of interest rates going a lot higher. However, interest rates are extremely hard to predict, so you can never say never, but it looks like if anything, they would be more likely to drop than go up at this point. So what would make them drop and what would happen to the housing market? Well, again, we have the data to see that last year around the September timeframe, interest rates for about 2 or 3 weeks briefly dropped to the low sixes, and we saw a flood of buyers enter the market, multiple offers on homes again. So a lot of people are waiting for interest rates, it seems, to get below that 6.5% mark before entering the market. So what would it take to get to interest rates below 6.5%? Well, it's really hard to predict, but let's look at some of the main things that are happening right now that could definitely support interest rates going lower and getting below that 6.5% mark again. So there's really 3 main things. Number 1 is we have to start seeing some type of clarity around all the tariffs and trade policies going on in the United States. With all the uncertainty and things changing, it seems like daily at this point, it's really hard for people to have long-term confidence on the outlook of the US economy. And when people don't have good outlooks of the US economy, they don't tend to invest in things like treasury bonds, which is one of the primary drivers of what interest rates are doing. So when you don't have a clear picture of what the economy is doing, people pull back, interest rates go up, and that's a problem for anybody trying to purchase a home. So over the next couple weeks and months, if we start seeing trade deals be made and some more certainty around these policies where we're not going back and forth all the time, this could help support interest rates coming down. So number two is going to be some clarity around the budget bill going through Washington right now. So it seems like the majority of economists right now are saying the bill as it is going to add trillions of dollars to our deficit, which is already high, and this is spooking investors. A lot of investors already have worries about how much of a deficit the United States is in, and they really don't want to see it growing. So as soon as this bill was introduced, we saw interest rates actually go up because people are assuming that they're going to have more deficit to deal with, and again, putting the US economy on shakier grounds in the future, which means less investment in those bonds, which means mortgage rates go up. So if we start seeing this bill get taken apart, redone, where that deficit is going to come down, that's going to be a positive sign for mortgage rates heading forward. So number three is going to be unemployment numbers. So unfortunately, the higher unemployment goes, the lower interest rates are typically going to go as well, because that's going to give people more confidence that the Fed is going to start cutting rates more aggressively, which eventually is going to trickle down to help interest rates for mortgages go down as well. So we saw indications of this briefly where earlier this week we got an ADP report showing that unemployment was much higher than expected, and we saw interest rates drop by 1/10 of a point in one day just from that report alone. However, over the next 2 days, we got some counteracting reports showing that unemployment wasn't that bad, so it bumped it right back up. However, if we start seeing multiple reports come out showing that unemployment is going up faster than people expected, you are going to start seeing interest rates continue to drop, which again, if all three of these things are happening, we could see interest rates get below that 6.5%. Now, how likely is that? Well, that's out of my range of expertise, but it's something that you could be watching for in the news, knowing that if you're seeing this, it's going to be either a positive or a negative thing for interest rates if you're thinking of buying or selling a home sometime soon. Now, there are hundreds of things that impact interest rates, and this is only three of them that we're talking about. So there's other things out there like inflation. If we see that continue to go down, that will have slight impacts on the mortgage rates. However, inflation readings over the last couple months haven't been that bad. Most of them are falling between 2.1 and 2.5%. The Fed's goal is 2%. So even if they fall down to that Fed's goal, they're not falling by that much. So it shouldn't have a giant impact on rates if they continue to go down. However, if you start seeing inflation heat back up again, that is definitely not a good sign for the housing market, because you will most likely see interest rates stay higher for longer. So with the current trends in the market showing that we're pretty much in a balanced or maybe even a slight buyer's market in some areas, what is my advice for both buyers and sellers? Let's go ahead and go over that now, and let's start with buyers first. Okay, so buyers, the great news for you is you have more homes to choose from than you've had in a very long time, and also you're not having to place offers immediately as homes hit the market. You oftentimes have a week to maybe even 3 weeks to make a decision on what homes you want to place an offer on. This gives you time to check out the area, look at the amenities, look at the schools, and have a much better and a clearer picture of if that home is going to be a perfect fit for you and your family. However, you do have to understand that we are in no means in a hot buyer's market, anything like that. Sellers are still in very good positions in terms of financially in their homes. If they have a mortgage, most likely they have an extremely low interest rate and a low payment if they have a mortgage at all. And so oftentimes if they can't sell their home, they're just going to pull it off the market, live in their house a little bit longer, and maybe try again next year. Yes, there's always going to be those sellers that need to sell and are more desperate to do so, and those are the areas you're going to find better deals in. However, just understand we are in a market that is still pretty balanced, and sellers are just not going to entertain offers $50,000, $100,000, $200,000 below whatever the last home sold in that neighborhood was. You need to make sure that you're realistic when you're placing your offers. The other thing that you as a buyer definitely need to understand is real estate is always going to be local. What I mean by that is every city, even every zip code and neighborhood has a slightly different market going on within it. So you need to make sure that you're looking at the comparable sales and figuring out what type of market is that house in within the neighborhood and city that it's located in, to figure out how to properly place an offer to be aggressive but also save yourself as much money money as possible and place a compelling offer that is going to get you into that home. And the final thing I'll say on the buying side of things, and I say this often on the channel as well as to all my buying clients, is most likely if you're watching this right now, you are not an investor. You're someone that's trying to purchase a home for you and your family to live in for 5, 10, 15 years, and you're trying to make a long-term investment. So you might be trying to figure out, should I buy now? It looks like the market might be going down a little bit. Should I wait? The biggest thing for you to understand is that if you look at your finances and you can afford a home based on the area you want to be in, with the amenities you want, with the school system you want, it's always going to be a good time to purchase, because in the long run, home values have always gone up in the United States. And as long as you can afford that monthly payment, that's what you're really going to be primarily focused on, paying off the debt, building up your equity, and eventually when you go to sell your house down the road 10, 15 years from now, there's a very good chance, especially in Orange County, that you're going to have equity in your home, be able to sell it, and move into the next home that's going to help you in the next stage of your life. Now, if you are in the beginning stages of looking for homes and starting the budgeting process, I do have a free guide. If you're watching this on YouTube, you can find it in the description below, where it goes over everything that you need to know about the financial side of purchasing a home. So that way you can understand the financial side of things, and that will allow you to hit the ground running, have no surprises when it comes to the home purchasing side of things, and get you set up for success. So check out that link below if you're watching this on YouTube. Now, on the selling side of things, it's really going to come down to two things: realistic pricing as well as strong presentation of your home to make sure it stands out over everybody else's in your neighborhood. Right now, if you overprice your home just by even a little bit, oftentimes it's going to be sitting on the market for weeks or even months, and eventually you're going to have to do a price reduction. So you need to make sure that you're really focusing in on what the homes have been selling for around the neighborhood. Look at the condition of the homes, the location of the homes, and really understand what your home market value is to make sure it's priced correctly. Because in this market, overpricing is really just shooting yourself in the foot. Eventually, when you have to lower that price, you're going to have those buyers coming out looking for bargains, and oftentimes they're going to start offering those lowball offers, and you're going to end up with offers that are going to be even lower than what you could have got if you priced it correctly the first time. And on the presentation side of things, you might have to put a little bit more work into your home before you put it on the market than you had in the past, especially over the last couple years, again, to make sure it stands out and you really show it off compared to everything else in the neighborhood. This could mean things like repainting the outside of your house, doing some landscaping work, getting your home staged. Those type of things are going to help your house stand out. And then obviously on top of that, making sure you have a very good marketing plan where people can see your home on any platform they want to look at. You need to have professional photos and videos, so that way when people see it for the first time and have that first impression, which oftentimes 90+% of times in today's market is going to be online, places like Zillow, Redfin, wherever they're looking for homes, you want to make sure the home stands out there. And then also have things like 3D walkthrough tours, other shorter video clips that you can put on social media so friends, family can share it with others that might be interested in the property. And then making sure behind the scenes you have ads going on these platforms, on Google, so anybody searching for a home in the location you're trying to sell it is going to have eyeballs on that house, giving you the best chance of getting the highest price possible. And the other thing you need to have as a seller right now is going to be patience. So unfortunately, unlike a few years ago, homes are not flying off the market the first weekend, getting multiple offers. Oftentimes, to get the perfect offer, it's going to take a few weeks to do so. So you need to understand that going into the process, have those proper expectations. So that way you're not disappointed when you don't see 5, 10, 15 offers coming into your house the first weekend. So as long as you have those expectations clear, the whole process of selling your house is going to go a lot smoother. It'll be a lot less stressful because you'll know what to expect, because that's the type of market that we're currently in right now. Now, if you're finding this information useful, but you might have some more questions about your specific situation that didn't get answered here, and you would like to have a conversation to go over those questions so you can get some more clarity on maybe what strategy you need to have, well, I do have a link down in the description below, or the link in my bio, where you can set up a free, no obligation 15-minute phone call. Ask whatever questions you have, I'll answer them and help you understand what direction you might need to go based on your unique individual circumstance. So definitely take advantage of that. Again, it's in the description below or the link in my bio. So that's all I have for you on today's episode. So if you like this information so far and you want more of it in the future, make sure you hit that like and subscribe button. And if you're watching this on YouTube, check out these 2 videos right here where we go more in depth on what you need to know about today's housing market to be successful if you're thinking of buying or selling a home. Until next time, stay happy, stay healthy, and I'll see you on the next show. Bye, everybody.